I'm Dan Fitzpatrick at Stock Market Mentor and OptionMarketMentor.com here on the day after Christmas, December 26th. And by the way, if you're interested in options, you're on the email list, which is why you're getting this video. You'll be getting some information sometime. I'm actually meeting with Gary tomorrow to finalize things on an online option course that I'm teaching in mid-January. I think it's like January, January 12th. That's the second Saturday in January. I'll be teaching it. And so hopefully you're interested in that. If you want to learn to trade options the right way, then you need to learn it from me because I'm going to show you. Anyway, so hopefully you'll check that out. Okay, back to the stock here in question. Research in Motion. You remember last week I had said you definitely want to be out of this dog before earnings. And so what did we get? Well, we got the decline. And by the way, that wasn't like any brilliant insight on my part. It's just that I'm not a stupid RIMMonian or whatever it is where you just believe that the BlackBerry is going to come back, okay? Didn't happen, not going to happen. I'm just telling you. There will always be some BlackBerryans out there. But for the most part, I don't really see anybody leaving Samsung or Apple to go get a different fruit here with the BlackBerry. So they're losing subscribers. Didn't lose a lot, but guess what? If they lose some, then they didn't gain any, did they? So they're losing market share. But what happens? So the stock falls down. Now what I'm saying is, and that was a technical sell that I talked about on CNBC. It didn't have anything to, I mean, I mentioned a little bit about their earnings and you know, their BlackBerry 10 or, you know, all that stuff. But basically, the stock was just way too overextended. It had too much hope and hype put in there. So there was only one place for the stock to go, and that was down. Okay, so now what, though? Look at this big volume, massive volume on the way down. That cleared out a lot of weak sisters. You know, a lot of folks who bought up here and were, I don't know, use your own expletive there as far as why they held over earnings. That didn't work out too well for them. Well, now, Research in Motion has hit a tradable bottom here, and I would say that's Monday's low of 1059. I think you can actually go long on this stock in anticipation. You know, the market's going to start looking forward and anticipating the next event, and that's the wonderful BlackBerry 10. And if you look at the weekly chart, we can actually see a pretty nice setup for a long trade. Volatility squeeze and expansion out the upside. That was phase one, the initial expansion. Phase two is the pullback. Well, it looks like we got our pullback. We've got support right here. Now I'd look for more upside. So I'd suggest being long this stock if you're a trader, but just have your risk defined just below this last low, and I think you're going to be good to go. Okay, that's it. Members, over to the strategy session. I got a couple sectors that are working.